Now, the required return, yep.
The return that we want for our investing
it's a personal thing?
After tax.
Yeah.
It is a personal thing.
What figure do you put in there?
I use between 9% and probably no more than sort of 12 or 13%.
Which is like the long-run return of good quality shares, if you can pick good quality shares.
Correct.
Yeah,
It's an after-tax rate,
yep.
And that's the rate that I'm looking for.
Okay. So when, in this case, it was 20% was the return in our bank account. We divided it by 10%, we got 2. Now, was 2 a good number? Was that to say, yes, go ahead and purchase that?
Well, what we got was we actually got 20% divided by 10%, which is 2, times the 10 million in the account, which is 20 million.
Was it 20 million?
It was 10 million in the account.
Yes.
And I know it's not 20.
Yeah.
And so it'd be good if it was.
Yes.
But let's say...
Oh, your bank account, of course. Your own personal bank account, yes.
No. But our hypothetical account, right? It'd be good if it was 20, because if we could get it for 20, we've got a bargain.
Yes, right.
Right, that's what I mean.
So you're saying 2 times 10...
2 times 10 is 20 million.
And you start with 10, so it's a good buy.
Well, it's worth 20 million. If I can buy it for 15, it's cheap. Yeah. Okay? So all I'm doing is multiplying the equity. I'm looking for a multiple of equity based on the profitability or the economic strength of that equity.
And you get a price range where it's worthwhile going in by doing this.
Exactly. Yeah. What you do is you can say to yourself, well, look, the stock market's offering me these things. They're generating 40% returns on equity, and I can buy them for 2 times equity. Gee, that's a bargain. And I can get ASX and Cochlear, and I can get CSL, and I can get Fleetwood and JB Hi-Fi, and they're all cheap. Come March this year, they were all absolute bargains.
Yeah. But everyone was scared then. We want to know what Roger is saying now when we're all less scared.
But here's the thing. You are scared when you don't know what things are worth. But you should, if you know what things are worth, you should never forego the opportunity to buy shares in a great business because of short-term fears about the market or the economy.
Yeah, but I think this is the one black box or black hole that Roger Montgomery lives with, coexists with, and that is if we went into a Great Depression, and that's what people were worried about in March.
Yeah, sure.
I wasn't, and I was publicly telling people I wasn't. But
so everyone watching your show,
calculation, you know,
so if they had your show and my valuation model,
killed them.
They would have killed it.
That's right. But the thing is this: in doing your valuation model, it all could go pear-shaped, Roger, if the economy goes into complete reverse, minus 10% growth for 5 years in a row.
And you're going to lose a lot more money if you don't know how to value a business and you've bought things for way more than what they're worth. But if you're buying things like in our example at a 50% discount to their value, then you're mitigating the risk of loss over a long period of time.
Yeah, okay. What are the companies? I heard you talking to Richard about BHP. Mind you, I don't let you go on Richard's program before me, but we'll talk about that after.
Well, you sort that out with Richard.
Now, BHP versus Rio, and you had a pretty good argument that BHP was a better buy than Rio. Yeah,
I think, let me say this, I think BHP is a better business than Rio because it has less debt and a higher return on equity. So it's that bank account. It's a bank account that's earning a higher return, and Rio's got a lot more debt in that bank account than BHP does. And I always look for a high-quality business first before I work out what I'm willing to pay for it. So I only want the high-quality one. So given the choice between BHP and Rio, I'd always go for BHP. Now, the interesting thing is because there's speculation about BHP making a bid for Rio, the price of Rio's shares are way higher than the value of that business compared to BHP's. BHP's share price is a little bit higher than its value, but nothing like Rio. So when I compare the two, well, I got better value in BHP, and BHP is a better quality business compared to Rio.
Mate, fantastic. Thanks for joining us on the program.
It's a pleasure.
And you really have made it easier to understand. And if anyone doesn't understand it, contact me again and I'll make him come out and do a better job next time. Thanks very much.
It's a pleasure.
Cheers,
no problem.
Mate.